Ja. So I think I'm going to start now. There are some latecomers, but we have to be in time with this short seminar. Well, a very warm welcome to you all, both here in the audience, but we are also having a number of people following us via our webcast. My name is Eva Blom, and I took the initiative to organize this event. And why do we do that, actually? Well, in the Netherlands, there is national agreement on the circular economy. And since 2016, there is a program that has been set out for trying to use resources in a much more efficient way, in a smarter way, so that we can become circular in 2050. It's many stakeholders in the Netherlands who are involved in this process. It's companies, NGOs, business, research organizations, and the finance sector, and many others. To be able to go through this, do this transition, the Netherlands is not an isolated country, so we need to cooperate with other countries. We need to seek contact with other organizations, we need to collaborate, inspire both of us, and work together. So that's why I have been searching for other organizations here in Sweden to work together with. And today we are going to talk about the financial sector and the efforts that the financial sector is doing to help in this process. And I'm very happy that I can organize this together with NMC, the leading Swedish organization for sustainable business, and with Mistra, the research foundation. And I think I stop here and hand over to Åke Iverfeldt.
Thank you very much. I'm happy to be here, and it's an important occasion, I think, to have these international discussions, especially if you want to foster something so important as the development of the financial sector, which for sure will happen a lot, the development on a European level, I would say. Mistra, why are we here? We are a foundation created 25 years ago. We finance, or we call ourselves investors in scientific research that will hopefully will contribute to solving prioritized environmental problems, and also foster a sustainable development of society. At the same time, we want to also foster Swedish competitiveness and also take the opportunity to foster industrial applications. And given that, I think the circular economy becomes a very clear thematic area for us. Since some of our priorities is to help solving is climate change, but we fully consider that climate change goes together with resource efficiency and use of limited resources, and which means that the circular economy concept fits very well, and this is why we also have started to finance programs that focus on the whole circle, from design phase, which Matthias represents here, to actually find value in let's say the end product, and find resource value in the end products, and also all the steps in between. So. But we are not only financing or investing in scientific research program, we are also an asset owner. And we were very early to start with a portfolio that was fully invested in sustainable assets. And we use that, both our investment and our voice, actually, to also to push sustainability, to push the market, the financial market, in a sustainable direction. Which means, for example, that one of our scientists is represented in the TEG group down in Brussels. I have colleagues that have been expert connected to the TEG group. I myself have been down as a representative of an asset owner, small one, but still, in talking to the DG FISMA about the new taxonomy and for example, the new indices being developed for let's say, climate transition. So this means that we are seeing these international cooperation as a very important platform, and Brussels, of course, but also to have these bilateral seminars and conversations so we can strengthen the arguments and the good examples and actually have an impact on the legislative work as well as on the market, of course. So by that, I think I will end and say that for me this seminar is exactly something that we want to happen, that we actually compare our effort in two countries, and we have people from the scientific world and we have people from the financial world meeting together and hopefully finding at least steps in solutions for the future. So I'm very much looking forward to this seminar and wish you all good luck.
Thank you, Åke. And well, the third organizer of this event is NMC, the Swedish Association for Sustainable Business. And my name is Christina Atkinson, and I'm the Secretary General for NMC. And I also, of course, would like to welcome you all to this event. And for those of you who do not know NMC, we are also 25 years old, actually. And we have been gathering companies and organizations to discuss and also share ideas and experiences on sustainable business in all its dimensions. And obviously, today's topic, circular economy, is a key cornerstone in this sustainable society that we are striving for, and of course, sustainable business being an engine to reach this. So this is a topic that we have kept, I would say, coming back to during at least the last 3 years, and we will keep coming back to, because it's a big subject or topic. And I'm too also look forward to discuss the financing aspects of circular economy. And like Åke said, I'm looking at who's here. We're also happy to see that we have you being representing both the business sector, the finance sector, the academia, and also the civil society. So wonderful that you could come today, those of you who are in this room, but also those of you who join us on the web. And I think with that, I think it's time to invite our moderator for today. So please, Ingela Wickman-Bois, could you please come and join me on stage, and I will soon hand over to you.
Do you make an introduction, or shall I?
I'll introduce you.
Thank you, because I think he has to anyway too. It's a little bit loud, isn't it?
The microphone?
The microphone, isn't it? A little bit loud? It isn't. Okay, it's me. It's me. I hear myself. That's very...
Okay.
You do the
Yes.
introduction.
So, Ingela, you're a circular economy professional that I know is deeply dedicated to this subject, and not least, you have spent the last 3 years doing a master program in the UK. And here I have to read. And it's called Innovation, Enterprise and Circular Economy. As I said, it's an MBA program, and it's a triple accredited Ellen MacArthur program. And I think you're about to end this, right? Quite soon.
About to.
About to.
Yes.
But you have been working with sustainability issues for many years and in different sectors. You have the fast-moving consumer products, also the energy sector, and in doing so, you've been, I guess, well, actually broadly sustainability, but also marketing, innovation, etc. So you...
Yeah, well, it's Too many years, but I won't tell you how many.
A lot of good experience. So you'll be the perfect guide. And also, of course, you've been a board member of NMC for 6 years.
Yes,
Not
I've
to
just
forget.
finalized my 6 years. Then they kick you out. You're too old.
Yes, that's how it works. Okay, no, thank you, Elin.
Sure. Thank you very
I'll give
much.
the floor to you.
Okay, I would ask for the first slide. So we are actually admiring the Netherlands and Finland, I would say, as being in the forefront of the circular economy. Okay. Thanks. And we are all looking to Finland with their national strategy, but also Holland with a lot of good initiatives and very good business in the Netherlands to look at. We are no longer in Sweden maybe best in the world, even some of us try to think so. Maybe we were in the 70s in environmental issues, but we really have to look for very good ideas elsewhere nowadays. So let's look at today's introduction. So what I would like to do is just to make you have a little bit of a helicopter view from a financial perspective, but also from business perspective, as I know that we have many from business here and also finance. But we are covering for the rest of the speakers, we are covering the financial issues more than business. So to have a little bit of helicopter view, we can say that in this field we have 3 stakeholder groups. It's finance, it's business, and it's policymakers. And these 3 stakeholder groups really have to work together to make this transition happen. And I won't talk, and nobody else, for the policy making today. That is another subject for a completely another seminar, but it's very heavily linked, and they are very important as enablers of the infrastructure, societal infrastructure, and also rules and regulation, and have a commonality in that. But we leave them at the side for today and concentrate on finance. So a little bit first, where are we today? I will not explain the circular economy because that will also be another seminar. But I think that most of us are quite familiar with the basic concept and principles of the circular economy. So with commodity prices rising and population growth and what have we have brittle global supply chains riddled with risks. We have natural resources scarcity. So the circular economy concept is, of course, a very interesting and appetizing concept to mitigate risk and as an alternative to the limits of linear growth. So, what's in it for business and what's in it for finance then? Because some think this is a new environmental step that we should do much more good, but this is actually and less bad, but this is actually something that we are earning. There's a lot of arbitrage possibilities for both business and finance within this field. I can just mention there is for Europe, just for companies recovering their materials, instead of selling them, they take them back. So there is a annual benefit of $700 US dollars in this just by recovery, and there is so much more. So there actually is doing good and doing business at the same time, which is very appetizing. So, but like with any systemic change, we need to work together on this and simultaneously and create synergies. No, sorry. So I have to look. Yeah, here we start here. So let's start with the circular perspective through the lens of finance. So financing the circular economy is certainly not a trivial matter. It's actually very complex and difficult. Both business and financial industries see heavy barriers for doing this. And both sides accuses the other one for standing in the way for this. You can say the business, they argue that finance sector does not understand the benefits. They can't assess the benefits from the circular economy business models. And also they exaggerate the risk, of course, the risk factor, finance. On the other hand, the financial sector say that the new technologies of the circular economy business models, they are inherently risky. And that's true, they are. And therefore they are not bankable. So here we stand in two corners. That's what we're gonna look for today with the rest of the speakers, the solutions to this. So, so it's clear that it's risk that it's all about. So there have been a lot of reports. I will not stay with this one for long, but we have all these reports coming up. 2 years ago, we had nothing. And in the last 2 years, there's happened a lot of change, and you have all these reports on the market. Very interesting. This is only on the financial side. So it's a lot of research as well coming up. So the main question to ask yourself is, and this is standing in the way, what makes a business circular? Is a business circular if it's 100% circular, closing the loop 100%? Is that circular? Or is it okay to have one component or partly a closed loop? Yes, it is. But the thing is that we do not agree. We don't have a clear vision or a clear definition, rather, criteria. And this is absolutely needed to develop for the financial industry by themselves, and of course together with, I don't know if you can read here, financial sector, investment funds, rating agencies, and commercial banks and circular economy experts together to work on this. It's also, of course, to align one single standard among the stakeholders so we have we create a common playing field. We have common rules, because that's the only way actually to look at risk with the same glasses, so to speak, and also a true and a fair assessment of risk. With this, of course, comes development of methodology for evaluating the benefits, as I mentioned before, and the impact versus linear, because that has not happened before. We have been only, and the banks and the investments guys, they have only been looking at the risk from this and on the circular business models. Now we have to bring in the risk. Now I'm back, thank you. So, and the aim of all this, of course, a harmonization and alignment for a common playground, as I said. So, and also it's a question about consistency, also for public sector and government, of course, so that we are all aligned. So, to the next. So we're talking about risk, about the circular versus linear assessments and a true comparison of risk. You can say that the circular business models, they have a lot of risk. I will give you a few examples here. You can say market risk, value chain risk, for example, supply of feedstock, volume and price, demand for products such as secondary materials. There are several industries like the construction industry having problems finding secondary material because there are no markets for secondary materials as yet. You have technological risks, unproven technologies, which we'll have to hear about from Sepper about vertical farming. Operational risks, of course, cash flow risks. The cash flow dynamics are different from the linear business. There's also asset valuation in a linear system is completely different from valuation in a circular system. So we have a lot of issues here, and also depreciation. I will talk with Matthias Lindahl about that a little bit later on in the panel, and for the accounting principles and So I will save the positive externalities till last. The resource scarcity, price volatility, and reputational risks are, of course, the greatest linear risk. If you stay in the business, the linear business, you will have a problem probably in 10 years of time. So the sooner you act, the less costly it will be, and also to your reputation and brand. So I must keep to my script, otherwise I can stand here for the rest of the afternoon. So I think we can dig a little bit into, this is a very special risk. I mean, it's technology, new technology, and market risk or commercial risks. And business complain about business. Way. Yeah, I come and go. Okay. Technology and commercial risk is, of course, something that business say that the finance industry does not understand this, especially not technology, maybe. So there's increased need for knowledge within the financial institutions to look at technology, to deepen their insight in that. And it's not me saying that, actually, that is in one of the reports saying this. And up with a pool of assessment expertise. We will have some models presented here today for risk-sharing models, which are new at DLL, for example. We'll have financial instruments for that. We have also the EU funds, crowdfunding, Horizon 2020, which will end now, and then we'll start a new one. So there's a lot of things happening in this sharing risk process. But what the business then, the SMEs, for example, specifically, the large corps, they have often the money and the financial muscles to finance this, and also they have maybe the internal resources, or they will bring in consultants. But the small and medium companies, they have not the internal capacity, and they have also not the knowledge to prepare sufficiently good credit story to get bankable. So they need help with that, and also they need help, of course, to line up. So I will mention a little bit short about business here, the circular perspective, and here is my field. That's what I do in consulting, in value creation and value capture along the value chain of the new circular business models. So these are the sort of recommendations, not only for me, but also in literature and research. Get the management on board. And that is an old recipe, isn't it, for anything that is called change. Get the management on board, put up a strategy and a vision that actually, like H&M, for example, they have a very bold vision about coming circular in 2030. They don't have a clue how to get there. But the organization will follow, I'm sure. So it's that kind of bold visions we need. We also can actually use the management systems that the business have today. Many have a management system like ISO 9000, 14000, and they can use the process descriptions for finding, identifying opportunities. That facilitates a lot, and a lot of business is actually looking into this right now. Which is common ground, and it's Lean, and it's Six Sigma, and all of this, and that could actually help. Also, the environmental and social benefits should be covered. Another thing that is new for the circular economy is industry crossover partnerships. Normally, companies are a little bit reluctant of sharing information with other businesses, but there is, if you can arrange a collaborative way of business across industries, within the industry and across the industry, you actually have a wonderful way to also to allocate risk, costs, and also profits across different stakeholders and actors within the business. And this is also, I can mention, to mitigate the effect of market volatility, because it has proven that the companies actually do, they are not so affected about the markets. Last, and this is my last, knowledge gap. It's the same recommendation for financial industry, also for business as financial industry. Close the knowledge gap, build internal capacity. There is only one problem, they say in these reports as well, that the access to specialized counseling or advisory services offered by various public and private organizations is key, but it's scarce. We are not so many so far, and it takes some time to go through this at the university. It takes a couple of years, and we are in a hurry. So that is an issue that the companies are struggling with. But also here, they try to put up pools of expertise with a blended pool of expertise and see experts. Also covering not only the commercial aspects, but also digital technology, certification, legal, regulatory issues. Everything has to be weaved and be looked upon together. So, thank you, and I hope you will enjoy the rest of the day. Now I will put on the other cap as moderator for the rest. So I will invite Joost van Doen, ING Bank. And you will present yourself, you said, you prefer to. And I will really look forward to listen to your accomplishments in your sector.
Well, thank you, Ingela. Great to be here. My name is Joost van Doen. I work as Circular Economy Lead within the ING Sustainable Finance team. And for the ones who don't know ING, ING is a large bank based in the Netherlands. Our headquarters is in Amsterdam. We have a strong presence in both retail banking and also banking in Europe. But also we're present in the Americas and in Asia, Australia. We also have strong roots in sustainability, in innovation, and circular economy. We've done a lot of investigation also in financing the circular economy. I also saw one of our reports just popping up. It's Rethinking Financing the Circular Economy. But today I'm here to tell a bit more about the circular economy finance guidelines, for which we took the initiative to draft them together with our colleagues from ABN AMRO and Rabobank. So why this initiative? Why did we took the initiative to write circular economy finance guidelines? What we've noticed is that when we talk about financing circular economy guidelines, that there was also a kind of lack of guidance on, okay, what do we mean with circular economy and what do we mean in financing, providing debt and equity finance for the circular economy. We acknowledge that we have a strong role, or we also have a kind of responsibility to help our clients making transition from a linear economy to a circular one, but there was not clear understanding. So therefore we took the initiative to write these guidelines. And who is we? We is our colleagues in the Netherlands, ABN AMRO and Rabobank, but we took the initiative, but we wrote these guidelines also with the support of the Ellen MacArthur Foundation, the think tank about circular economy, and also together with our colleagues within the Finance CE Working Group. And I also saw another report from the Finance CE Working Group popping up in the slides of Ingela. The Finance CE Working Group is a working group consisting of several financial institutions like Intesa Sanpaolo, BNP Paribas, European Investment Bank, and they've reviewed the guidelines. And our aim with these guidelines is to create a clear understanding, and we want to help accelerating the finance process of the circular economy. It's a bit like the same what we saw happening with the market for the green bonds. When the green bonds originated in the beginning, everybody was talking, okay, what's a green about the bond? What's a green bond? And then there were the green bond principles defined, and that gave a clear understanding to the market. Okay, this is a green bond, this is why it's green, and the use of proceeds can be applied to these specific green activities. And then we saw that the market accelerated more and more. But what are the circular economy finance guidelines? Big part of the guidelines is about the use of investments. So it's about recognizing which business model is used, which circular business model is used. It's about, for example, offering products as a service. It's about sharing economy, or it's more related to developing new technologies for replacing raw materials. There's an extensive list of what we consider as a circular business model or not. But also about the impact assessment. So what's the impact created by the projects we finance? So it's the impact on the environment on the one hand, but it's also related to the impact on the society. And we have also mentioned some exclusions. Sometimes you can explain things better by explaining what it's not. So, for example, SEC renewable energy projects like solar or wind, they are important and they are very sustainable, but we do not consider them as circular. But the question was also, okay, and what did we do as ING? How do we apply the circular economy finance guidelines in our own operations? And to start with, I just mentioned that part of the guidelines is about recognizing the circular economy business models. And to train our front office, we make use of the business models of Accenture. Are these business models well known by everybody? Or? Accenture did a lot of research into successful circular companies, and they all have in common that they are focusing on reducing waste. So they've created 5 business models along the supply chain of a company, which all have in common that they are focusing on how can we reduce waste. So the best way to reduce waste is to not throw away your product. That's what we call the product life extender. So how can you, by remanufacturing or refurbishment, extend the lifetime of your product? That's one. The other one is about recovery and recycling. So when a product comes at the end of the life cycle, try to recover as much materials as possible to recycle, to upcycle them. Might be input for another product life cycle or for the same product life cycle, but don't throw it away. The circular supply chain is about creating substitutes for virgin raw materials. We learned that there's a pressure on natural resources, so also try to come up with substitutes for these resources or other smart solutions. That might be part of the circular supply chain. Sharing is also related to the circular economy. Sharing is more about optimizing the usage ratio of your assets in this situation. So, for example, car sharing is a great example for this, and it's expected. So in the Netherlands, we see that the cars, 95% of the time, they're not used. So if you optimize this usage ratio, it will lead to a lower production in the end, and less waste. And the last one is products as a service. It's the business model where companies start not selling their products, but offer them as a service. And it's seen as one of the most powerful business models of the circular economy. On the one hand, because it aligns with the trend that from user perspective, so the one who uses the service, that they don't have to invest anymore in their own assets. They pay for the access to the assets and for the usage accordingly. And on the other hand, it's for the manufacturer an incentive to create and to build durable products. Because he's responsible for the product, because he will own the product and he will offer it as a service. So it's his responsibility or her responsibility to keep the product as long as possible in the loop, to generate cash flows and to earn money with it. So from a financial perspective, this is also the most exciting one to finance, but for sake of time, I'll leave that for another time. What did we do else within our own company to prepare our relationship managers, front office colleagues, people who are in touch with our clients, to learn more about the circular economy. We have created the first one. It's a very low accessible e-learning, which is a quiz to learn more about the 5 business models, so to recognize the 5 business models. It's a quiz of 25 client situations, and you have to apply the right business model to this client situation. But for example, we've also trained all our mid-corporate relationship managers in the Netherlands. So the 200 relationship managers have had an extensive training on circular economy, that they understand the topic and that they can have a good conversation with our clients around this. The third one, I like this one especially, is a game. It's a business simulation game, which we can do on the one hand to train our own colleagues, but also what we can do and play together with our clients. It's a simulation game where you're in the virtual management team of a bicycle factory, and you have to transform your business from a linear business model to a circular business model. On the one hand, improving also your return on investment, but you have also to improve your level of circularity. So it's a great way to learn more about the circular economy, and you have another kind of conversation with your clients when you play together a game. And last but not least, the scorecard. It's not a game, it's a tool. It's a tool internally used to assess a circular transaction, because we want to identify the finances we have provided to support the circular economy, but we also report about it. But if you want to report about it, you have to measure it. And therefore, we have developed a scorecard, which we are now embedding in our systems. The solutions we have provided, these are more the financial solutions. I've grouped them in 3 groups because we have several financial instruments available to help our clients financing circular economy business models. So the first one is more our regular product, so to say, so just a loan, a lease, supply chain finance, etc. But we also want to try, not only want to try, we also couple circular economy to our green products. So for example, green loans, green bonds, or a sustainable improvement loan, which is a loan where we can couple the ESG performance of a company to the interest margin. So if he's improving on the level of sustainability, the margin goes down, or the other way, it goes up. But we can also link this to specific circular KPIs. But also, for example, for green bond, we're just at the moment helping Philips with issuing a green bond, where the use of proceeds will be used for specific green activities and specific also circular activities. In this case, the refurbishment of medical equipment. But the last one, and this is also the most difficult one, I think. This is the new business model development. And we don't have a one-off solution at this moment for business model development because it's new. But what we do is we try to engage with our clients at an early stage to completely understand what's their current business model, to which business model are they migrating to, and how can we provide solutions for it. So, for example, the products as a service is such a business model where we're focusing on how we can help our clients. What makes it difficult is that it's also mentioned in the talk of Ingela, is that there are, for example, also more parties involved than just one. And that can be a disadvantage, but can also be an advantage, because there might also be some stronger parties available in this partnership, to which it's more easy to structure the finance to. But what we also see is that ask for multiple sources of funding. So not everything is bankable. So if we cannot finance it ourselves, we can introduce it, for example, in our network of equity providers who have a more higher risk appetite than banks have, and that we can find it, the solution in such a way. And the last slide. So if we talk about financing circular business models, what have we learned so far? So what's the difference compared to the old situation? And the old situation I've called the linear economy. First of all, in the old situation, we were used to finance assets. And in the new situation, it's not more about, it's also about assets, but it's more about services. Also, when a company offers their products as a service, It's the service which is key. And also the underlying contracts becoming more and more important. So it's the contracts between the one who takes the service and the one who provides the service. But there might also be many parties involved in creating the as a service proposition. And there you also need to have clear agreements with each other to propose such a solution. What's also different is in the old world, so to say, we were focusing on historical performance, on assessing historical financials. And in the new economy, we don't have those figures available. So it's also about future and forward-looking. So it's more and more that the future cash flows are becoming more and more important. It's also related to as a service. The cash flows generated in the as a service contracts becoming more and more important. Also different, on the one hand, in the old situation, you provided a loan between a bank and a single company, and now we have to finance partnerships. And the last thing, which is typically also a thing for the circular economy, is that in the old situation, the residual value of a product is known. So the leasing companies, for example, have extensive schemes how their assets depreciate in time. But in the circular economy, the residual value changes because we have products, we have components of those products. We try to keep the products as long as possible in the loop. So the value will also change because we keep them in the loop. But how do we have to depreciate it? So that's also a thing which is difficult for the circular economy. So that were our learnings with regard to the circular economy.
Thank you very much. I have one question for you. I have two actually, but I think I will have to deal with one. Bringing in a little bit about policymakers, as we are not talking too much about them today, what would you say that they have done in the Netherlands for facilitating both business, but especially the financial industry, and the terms you are doing?
What the policymakers did in the Netherlands? Well, what we see, and I think that's a good step forward, is, and Eva already mentioned it, is that the Dutch government set a goal for by 2050 the Netherlands should be completely circular. So that helps to create awareness and to set the wheel in motion. They've redefined it now a little bit more that in 2030 we have to use 50% less materials. So that's a little bit more closer. That's 2030, that's in 11 years from now. But what we also see as a concrete example, it's an example, but I like it, is that the Dutch government is giving a tax benefit for parties who use material passports, because material is becoming more and more important. And if you want, for example, in the built environment, want to make use of and reuse materials, you also have to identify those materials, and the material passport says something about the level of quality of such a material in order to be able to reuse it. And the Dutch government has given now a tax benefit for those parties who will use material passports. So I think that's a nice example of the policymakers putting it into action.
Okay, yeah, I know that one. The material passport is very interesting, but it's nothing special for the finance industry.
No, it's finance related. It's more related to where the Dutch government provides guarantees, for example.
Yeah.
So, for example, we see Fairphone in the Netherlands, which is a company who makes really nice, cool circular phones. And in the last finance round, they have been financed by banks, but also by equity providers, but also with a guarantee of the state.
Okay.
So I think that's a great way to stimulate those companies.
Okay. Thank you very much. So now we will come up Susanne Glykofridis. I think it's Greek, isn't it? Yes.
Actually has a meaning. Sorry. It's an inheritance from my former husband. So glyco from glucose, fridis from eyebrow. So sweet eyebrows, it means. Easy to remember. How do I start up the...
Yeah, you actually use this. You just here. And it comes up automatically.
No.
Yeah.
No.
We see you. Okay.
Let's see if the film's there.
Okay, the floor is yours.
Okay. I will start with a short movie first. Hopefully, start.
At DLL, we are committed to making sure our customers, society, and the environment benefit long into the future. Sustainability is essential to our mutual long-term success. We strive to maximizing societal relevance by offering our expertise, volunteers, and donations. We aim to improve our impact on the environment through resource optimization, technological innovation, and the way we do business. We are suppliers of sustainable innovations and clean technology, and we actively contribute to the circular economy by creating sustainable business solutions like our life cycle asset management.
So, I'm Susanne Glycofridis, as already mentioned. I'm the general manager of DLL Nordics. And DLL Nordics is a fully owned subsidiary to Rabobank, as you've been mentioned here before. It was established in 1969, so we're actually celebrating 50 years anniversary today, this year. Our business model been more or less the same since we started, so for the last 50 years. And that is that we are offering financial solutions through long-term partnerships. So what we do is that we set up cooperation agreements with partners, manufacturers, distributors, dealers, and together with them, we offer financial solutions to their customers. So the business model been more or less the same, but the products changed. And this change actually happens the last couple of years. So I will tell you a little bit more about that soon. But first, since I don't know if all of you know our company, I just want to go through very, very briefly some facts and figures about DLL Nordics. So we have had, actually in 2018, 210 Nordic members. We call them members and not employees. And that number is constantly increasing, so right now we are at 220. Most of our business is generated through a front office tool, digital, by our cooperation partners, so by the manufacturer, dealers, or distributors. Last year, we entered into 34,000 agreements, and about 14,000 of them were signed digital. So that's something that we are working on to try to increase that penetration, because of course it's a win-win for everyone, especially for the environment, that we can sign digital. We are currently present in 8 different industries, and you see that they really vary. It's everything from agriculture down to transportation and tech solution. So in all these business segments, we have cooperation agreements with our partners, and we offer financial solutions. So I mentioned that our products are changing. So the population in the world is growing, and we all have to contribute and manage the waste. And being in the leasing industry, as we have been, we have a lot of assets, and that's a lot of waste. So we have to come up with a way, together with our partners, to work with this waste. So I will show you a short movie for you to see a little bit of what we are working on here.
Starting with the Industrial Revolution, the world has been changing at a fast pace. To fulfill the growing demands of consumers, assets have been continuously mass-produced. This has been the backbone of the linear business model, where manufacturers produce more, sell more, and after having been used by multiple owners, Eventually, we all discard more. But today, we need to adapt to the changing environment. So shouldn't assets be manufactured to be refurbished and reused instead? What we would also like to address are two dilemmas that business owners constantly face. They wonder whether they should invest in new or pre-owned assets, and whether to invest in ownership or to rent the assets instead. In response to the growing waste concerns and the business dilemmas, DLL has developed a comprehensive vision, life cycle asset management, where the manufacturer and the dealer take responsibility for management of the life cycle from production till disposal. Provide the parts and service for the ongoing maintenance of the asset, and focus on the full life cycle, including the refurbishment of the asset. DLL is here to support and partner with you at every step of this shift by providing a comprehensive package of financing solutions, such as inventory finance, operational lease, upgrade finance, second life finance, and end-of-life recycling. So let's work together to find solutions to make it profitable for all of us.
So Rob Herb, that is Vice President within Asset Management in DLL, he co-wrote together with Rabobank an article in the Harvard Business Review. And they identify 3 components that are used by companies that are successful when it comes to circular economy. And one thing is that they all implemented modular products architectures. And the other one is that they only sell some of their equipment, and they also offer leasing products for some of their products. And the third one is that they all expanded their refurbishing offerings. And if you put all 3 components together, then you have what you just saw in the movie, the life cycle asset management product. And that is actually a product that takes care of the asset all through the life cycle. And we've been working together with our partners to do what we can to really extend the life cycle of the products. Starting with the beginning. So when the vendor, manufacturer wants to sell the equipment, he wants them out to the dealers, and we are helping them with the inventory finance. And then it's out on the market, we are helping with operating leases. And then it becomes interesting, because here, instead of what we usually did, or we used to do, is just taking back, repossess the equipment at the end of the lease term, what we do now is that we look at the equipment together with the partners and see, can we upgrade, can we refurbish the equipment? And by doing that, we can prolong the lifetime of the products. And then either offer a second life finance, or we still have to take the equipment back and recycle it and sell it to someone else. What we see on the market right now is that it's not only the need to offer circular economy because we have to manage the waste. And this product takes care of the cradle to cradle and use the cradle to cradle model. But we also see that the demand from the new generation is changing. So the young generation, if I look at my children, I don't know if you see the same, or maybe you are more modern than me, so you're already there. You see that they're not interested in owning equipment anymore. They're also not interested in leasing the equipment for an extended lease term. What they want to do is to pay for the time they use equipment. And you see this, you just have to leave this building, and outside this building you will see all these kickboards and bicycles where you can download an app and then you pay for the time you use the equipment. And this is how the new generation looks at the future of the finance industry. So you will see much, much more of these kind of products. And we are, for example, working together with Philips Lighting. So, and what they are doing is that they sell LED lights to companies. We were thinking together with them, that can we do something to offer a pay-per-use product of these LED lights? So what we did is that we, together with Philips, went out to the customers and we said, okay, so you want to change the lights? And the customer said, yeah, but it costs a lot. We said, yeah, but it's better for the environment, lasts for a longer time, you should do it. And then they said, yeah, but it's huge cost if we have to change all of them. So what we then did is that we offered them a pay-per-lux solution. So we changed all the lights to LED lights, and they are actually paying for the time they use the lights. And this is a solution that you can use, I think, for all business segments. See them in car pools, for example, where you pay when you use a car. We will see more of them in the future when it comes to the farming industry. Well, because we all know that a tractor, you don't need as a farmer to use a tractor the entire year. So what if you can share the tractors with others and only pay for the time you use it? So this is really what we will see in the future. And apart from that, as I said, it's important to be able to offer financial solutions everywhere in this life cycle. So this means that all finance companies in the future have to have a variety of different financial solutions. It's not enough anymore to only offer a leasing like we used to do. It's also not enough to offer leasing and don't have any solution for recycling at the end of the lease time. If you continue like that, you will not have any customers in the future. And that, for me, was it.
Thank you.
Thank you.
So yeah, all this is very interesting about the pay. You don't own the product, and instead you rent it, and so on. One thing, when we talked earlier, I thought it was interesting talking about this allocation of risk, but also allocation of profits. And you had one business model that I haven't heard anybody else actually using to that extent that you do, and that is that, I hope it's not secret, this contract with, was it Selecta?
Yeah,
yes,
Selecta.
Please, just to give a short.
Yeah.
Short.
So what we are doing together with Selecta is that we are financing the vendor machines that you find at bus stations, train stations, and we only get paid if the customers buy candies or sodas or whatever in these vending machines. And the profit from the machines is split between us and Selecta. So these are the kind of profit-sharing models.
Okay, thank you, Susanne. And I invite here to see. It's very international here. Here we had, a Greek or half Greek, and now we have 100% Italian. Emanuela Vanacore.
Correct.
Emanuela is also a classmate from the MBA in Bradford. So welcome. And you were late on the train, stuck in Hallsberg.
I should have arrived in Stockholm at 12:37 and I arrived at 2:20.
Well, that's good. Thank you, SJ, for delivering you here after all. Okay.
But I made it.
Yes.
So can you show me how to...
Yes, it's this one.
Mm-hmm. Brilliant.
This is yours.
Yes, I can.
Yes. So you present yourself?
Yes.
Yes.
So I'm going to be talking about a project, Financing Circular Business Models. And my name is Emanuela Vanacore, and I work at RISE, that is Research Institute of Sweden. It's a major research institute in Sweden. I focus my job on the circular economy, business model innovation, and management systems. So just a brief introduction. So obviously, as we've seen from the previous presentations, there's lots of challenges around implementing circular business models, demand, design, value chain, and business ecosystems, logistics, traceability, pricing on resources and work that maybe demands a different tax system, business organization, and financing. And obviously, I'm going to be focusing on a project on financing circular business model. So let's have a look at the background of the project. So, you know, the main idea, one of the main ideas of circular business models is to achieve a radically high resource productivity. How? By producing products with a longer lifespan that can be upgraded, that can be maintained, repaired, and so forth. But in order to achieve such a business model, it is important that the ownership of the product is kept from the manufacturers, whereas the customers just rent or rent the products, the functions, and instead of buying in a linear economy. So the main goal of the project was to try to find a simple way to shift towards a new circular economy. How? By identify and trying to eliminate all those bottlenecks when it comes to financing a circular business model that is specifically focused on functional, say, or PaaS. PaaS stands for Product as a Service. So the main hypotheses of the project were these four. So, as we said, new business models, circular business models, mean that the manufacturing company retain the ownership of the product. That has an implication, obviously, on the balance sheet that will grow on the asset side. So, in the short term, the cash flow will kind of get worse, but will remain pretty stable in the long run. So, and the problem of switching to a different business model will be more important for SMEs that don't have the possibility of self-financing so easily. And another hypothesis is that maybe the financial sector is kind of overlooked some good opportunities in the long term due to existing risk models and views on collateral. So this is an overview of the participants in the project. So the project was, is coming to an end, actually, led by RISE, funded by Vinnova, the Swedish Agency for Innovation. We tried to gather, many stakeholders. So from one side, we have the some manufacturing companies, and we have also some financial actors, because we wanted to listen and try to analyze both points of views. And then we have a reference group for more support. We also had two consultants helping us, who are experts in accounting and finance. So we collected a great amount of data, primary data and secondary data. So we conducted a lot of interviews. We did also some collective workshops, and we also tried to extend, our research. So we not only interviewed the actors that you've just seen in the previous slide, but also we contacted other manufacturing companies and other financial actors also abroad. And it is interesting to note that all the companies, the manufacturing companies that we interviewed, they were all interested in switching to a circular business model. They are from different industries, different size, and also in different stages of their circular journey. So I will be showing you a summary of the results from the manufacturing company and from the financial actors. So in short, we can say that the companies we talked to, they say that switching to a service pass model is not like the biggest problem. The problem is more about scaling up. So it's accessing loans, flexible access to loans and capital is a critical point. This problem is particularly relevant for companies that can't be financed within a large group, so many SMEs, for instance. And the expansion of a circular business model requires a co-risk taking and co-financing between the different parties, well, the owner and the lenders. So, and another thing that we observed is that the evaluation of fixed asset changes. Let's think about, for instance, the inventory. So, and if the fixed asset changes its valuation, then this affects in turn the key ratio, and this in turn can affect the entire organization. So let's have a look now at what we observed and concluded by talking to the financial actors. So the financial actors, the sector in general is a key player to scale up product as a service models. And what is really critical, and I think in the previous presentation this came up already, is that there is a great need to really understand the customer's business models and to have also a long-term perspective on that. And for the financial sectors, it might be worth taking the risk to really engage with the companies at the very beginning of the transition journey of the company, so that the financial actors can immediately start building that necessary knowledge to help that transition to be actually an active part of it. And another interesting point is that government funding actually can, could speed up and help the shift towards new circular business model. And an example of this can be targeted transition loans. So now we can have a look at a bit of a summary of what are the challenges and what are the opportunities. from what we observed. So obviously for the financial sector, there is this perceived risk, as things are in helping companies in transitioning to a PaaS model. The repayment period in the business is extended. Also, there is a problem that it's difficult to assess new business cases because there's no benchmarks available. And the view, how collateral are considered needs to be reassessed, changed. For instance, when the stock is no longer traded as fast as now, and second-hand market do not exist. So there is a great deal of work to do in terms of reviewing internal processes and methods for risk assessment, credit rating, and collateral. But there are obviously great opportunities. So there is the risk that actually staying in the status quo might actually be more risky than actually starting this journey. And there is obviously the opportunity to really understand better the customer by engaging with them more and trying to really understand better the value proposition. So there is the opportunity for financial actors to really become strategic partners and be really key in developing circular business models. So banks, for instance, can be really part of the customer's business ecosystem. And I would like to conclude with just a couple of interesting quotes that I took from the interviews. So today, the short-term capital is a problem, and there is a need also to go from retrospective banking to future banking. And I can tell that from all the partners that we interviewed, there is this willingness to go into that direction. So, thank you very much.
So thank you, Emanuela. I have one question for you.
Yes.
So what is the next step in your research?
Next steps in research. Obviously, we did one project, and it's important to have, to test on the ground, what's happening. But we can't claim that this is statistics now. So obviously there is a need to expand the research to involve more actors, more companies, different industries, things like that. And another point that is very important is to also consider the role of digitalization in this. Because, for instance, to assess, the residual values of assets, maybe the use of technology can be very helpful.
Yes. Okay, thank you very much.
Thank you,
Emanuela. Okay, what I hear from all these sessions here today is collaboration, is diffusion of the circular business models, to spread them and to rethink circular business models. And I think we will be in for an interesting panel discussion. We will have a short coffee break now. I'll have to ask Kiki what time it will finish. 16:10. So we all go for coffee, and then after this we will invite Sepper to tell us a little bit more about a failed, can you recall it that? Failed, yes. It's always interesting to look at the failures, not only the successful business cases. Okay, so everybody, see you in a while for coffee. Thank you so far.
prata sig till. Ja, lite chans.
Nej. Okej, men det var för att han inte stängde av den. Men annars...
Okej.
Precis där med det.
Ja.
sönder, hon pratar också då. Dels skulle jag i och för sig absolut kunna åka. Jag brukar ändå för ibland folk tar dem mitt och knacka som hallå, jag kommer inte fram, men jag får säkert igen så mycket har chans. Nu är jag öppen för det här, hur jag är fram. Men jag ja, men det är den här nere. Ja, jag ska bakom mungipan. Man ska lite rakt ut. Jag kan fixa det. Så kan jag bara gå bort med installera bara. Jag vet att jag skulle vara så att det går fort som jag gör det. Så det fick mig bara fixa det. Och det stökade ingen. Och vi kom hit och bara gav så här ting. Så var det så här, okej, jag vill ha en liten bild. De som är micken är bra för att det är bra. När kör vi? Är det prick eller?
Det är 10 över.
Okej. Ja. 10 över. Vi är 10 över. Emanuela och han Jules ska ta oss hälften nu. Emanuela och han Jules ska ta oss Ingen då? Excuse me, where did you put your headsets? Where did you put the microphone?
Yeah.
The microphone, where did you put it?
Where?
Yeah.
You mean
The headset and the back. Yeah, do you know where it is?
Oh yes, she took it.
Oh, yeah.
So, ladies and gentlemen, it's time to start again. So, please come and get seated.
Yes, but you will use hand mics for the panel. That's fine. Thank you.
So welcome back. Have you all tested this one? Tony's chocolonely. Well, anyway, everybody's back from coffee. Back there, please. We will restart with Sepper Mosavi. Welcome on stage.
Thank you.
And Sepper is from, or I mean, hard to present you, but when I met you the first time, I was writing one of my assessments on the vertical farming. So I interviewed Sepper in his role as sustainability manager and innovation at Plantagon. So you will tell us about the story of what happened after that.
Yes.
So here's...
Thank you so much.
Here you are.
Perfect. Great. Thank you for the invitation. Yes, I have worked as a sustainability strategist and sustainability director for a couple of clean tech companies, and among those, Plantagon, as Ingela mentioned, which worked with vertical farming. I also was involved in a couple of other initiatives, like chairmanship of the National Standardization Committee for Smart Cities for Sweden, or on the policy level has been like a climate change advisor to a task force for climate action at the United Nations. So worked a bit with different sectors that actually had to do with opening some room for different types of innovations with impact, I would like to call it. And going back to whatever that was presented on the first part of the session before the coffee break, actually, we got a lot of things that actually pointed towards, yes, in manufacturing industry, for example, you have better room for doing new things and being more innovative because it's easier to put a price tag on things. And when you talked about also, Emanuela also mentioned that SMEs have a more difficult actually work to do when it comes to different types of innovation development or technology development, because sometimes you don't have this self-financing and you need to actually bring in some other financing on board. So it's really important for exponential technologies, because sometimes we could just shift a perspective, start to build upon the existing infrastructure that we have in cities, in our society, in different value chains and so on. Sometimes you need to totally come up with new ideas, build up infrastructure, change many things, and then it becomes more and more difficult. I mean, many of us talk about different issues that we have on this planet when it comes to climate change and global warming and many different issues like urbanization and population growth and so on. And we are talking about many segregated islands when we are talking about growth in our company, and we're not thinking that much global and what's the impact of this innovation. We focus on small boxes, which is sometimes good. You have different kind of Lego bits that you build up something, but sometimes you totally lose the sight of that. You need to actually keep yourself on the forefront if you want to lead a change, especially, for example, as a nation, that I think for example, there we dropped this ball when it comes to circular economy, for example, and many, many other different areas. So it's good that we start to look at another success stories and also maybe sometimes learn from some failure stories, which one of them I'm gonna tell you about today. Plantagon, the company that I worked for before, it was a company that actually started to think about developing a new industry, which is scalable industrial vertical farming or urban agriculture. The concept was quite compelling. You had an idea that you could actually grow food inside the city in indoor climates in vertical farming, which is more or less growing food in different layers. And many different facts actually pointed to that's a very good idea. It's doable business. You have 70% of this, 8 billion people residing the planet inside the city, so the food should come closer to them. You have many different resources which are more and more being scarce, and then these scarce resources, of course, if you could control them and do that in closed loops and circular economy, it's really good. And then this food, energy, water nexus, and 10 to 15% of our food should come actually within the city borders. Okay, interesting. And then vertical farming also had many of these factors to go forward, because vertical farming is all about efficiency in footprint of a production unit, because you can't like have like a traditional farm downtown Tokyo. You need to like stack things up so you get like more vertical farming ratio, so you could produce more. Then you could have controlled that and build up like symbiotic systems, which in case of, for example, Plantagon in city of Linköping was a collaboration with the local energy company. So you could have like different flows that you exchange when you have like some sort of surplus here and there, nutrients that you could exchange with the biogas plant, for example, and many of these different aspects. And this company also got some sort of like good financing when the company started, more or less around like maybe 10 years ago. But unfortunately, in the beginning of the year, this company went bankrupt. And the company also has like try to do some different types of like financing, from crowdfunding to majority owners funding to project funding and so on. And that's very funny because a company that represented Swedish innovation, this is from the Swedish Institute, and this magazine is something that the Swedish Institute basically like put together to do some sort of like advertising for the Swedish innovation. The other kind of like innovations that went on those was Spotify, Volvo, Skype, many likes of those. And from that, this company like went bankrupt. And learning under this kind of like 5 to 6 years that I worked for Plantagon, I learned many different aspects about like the innovation itself, technological development, also a lot of hinders with policy and financing. And those are the things that even sometimes when you have a good idea, your innovation flies or it doesn't fly. And it has to do with a lot of different parameters. You could talk about like the good idea. Sometimes you have a very good idea. More than 99% of good ideas die because the other factors are not in place. Financing, a good team and a strategy, a very viable business case, and more important than all of them, timing. But this timing is quite interesting because sometimes you could be ahead of your time, which Plantagon was. There wasn't existing infrastructure for these to go through. Another example of that could be like, for example, a streaming and services like, for example, Netflix. Why Netflix succeeded so fast. And then 2 years before that, another bigger companies like, for example, Pixar and Sony tried a streaming and they failed. Yeah? Because nobody had like a smartphone, it was more difficult with the speed of the internet, you had a lot of hinders like that, so they picked up exactly in the right time. So sometimes you need to find a model that enables this too. I guess this is my most important slide today. You're talking about a revenue model and you're talking about impact. Sometimes you're talking about impact which is too much here. So you're talking about like saving a lot of water, for example, in vertical farming. So instead of 250 liters of water, we take it down to 1 liter. Wow. But who pays for that? You're going to lower down carbon footprint. Who pays for that? There are many different things like that that you can't actually do that. And then if you start by like trying to matching these two that they overshadow, I guess we resolve the problem. So one example that I could give you, because we started a new company out of the ashes, like a kind of like a phoenix, we could say, and we actually managed to secure somewhat around 3 million euros to actually do that. So one part of the innovation, which was the minimum viable version, could go further. And maybe it's interesting to see like how we managed to get the financing and what's the role of like kind of like kickstart financing in that. This is exactly the difference between what we do in this building, which is the old newspaper like building of Stockholm. I guess many of you know about that. We grow food under that building in a totally circular model, in a lot of exchanges with the building. So we broke down the concept from a smart cities to a smart buildings. And then we started to talk about like not losing a lot of different technical challenges. And then we started to rode on a second wave on many different like technology trends. So instead of like building up a new industry, we started to use many other technologies that are actually like in place for control climate, for example, for sensing and data, for building up a system which based on data helps you to provide big data and then run this kind of farms with artificial intelligence, talk about digitalization solutions and robotics and a lot of different technologies like that we started to match together to actually do a revolutionizing solution for agriculture industry. So if you're more interested, we could talk about our data management systems and our energy solutions and recycling and so on, and how is it more like circular economy. But as we mentioned, this kind of models this one is from MacArthur Foundation. And there, we are talking a lot about manufacturing. I guess it's very important both for the financing sector and also for the innovation development organization and this kind of more publicly available funds, both from the EU level and also at the national level, that we could allocate resources to kickstart these. Because SMEs who work with this kind of technology that actually are a bit more flexible, they have the possibility to change things for real. But we need to get support. We need to have some other sort of index and KPI for this kind of exponential technologies that we talked about, because sometimes you don't put a price tag and a value in risk minimization in kind of technologies that have to do with carbon saving and circular economy and resource saving technologies in many different industries. And if we want to actually go further and win this climate change, and we talk about globalization, because sometimes I think even if we think we're thinking very global, we don't. Because we focus on maybe interior design of a really beautiful apartment here in the Nordics, or even many other countries, that we have this leverage to actually have an acceptable level of living standards. And we forget that this kind of technologies, we need to spread them out to the underdeveloped parts of the world as well. And what kind of mechanism we have for that, if we can't even help our own startups and SMEs to go forward. So this could be maybe my input, that we need to think a bit outside the box and try to develop some sort of new price tags. Now we have done that with manufacturing industries and waste industries and many other ones. So we see that more clearly, things that our kinds of generations before us basically threw away and saw as waste. So we produce things, and now we could actually see new things. So that was from me. And if you have any questions, I guess we could have a talk at the mingle. Thank you. Thanks.
Very interesting. Sapper, I've always been catched on this idea of the vertical farming and urban agriculture.
I know.
Coming from Arla Foods, I've spent a few years there. So, but anyway, we hope that this will re-emerge when the timing is more right. However, we'll just one question here, and then we'll save the rest for the panel. So will startups now have to turn to crowdfunding as a financial?
Yes. Yes. No, I mean, crowdfunding is one of those kind of people more or less donating money, because mostly the investment that you do, they fail. So you put money on things that you like, and that's quite nice. I mean, to see that people actually like to do stuff like that, even it's a lot of risks. Yeah? And that's the thing that maybe sometimes you need to apply to bigger funds that actually the taxpayers put together. So you could democratize this kind of bigger platforms that people say that I want that initiative to get the money. Because today the matching of financing for innovation towards those which are well established and are coming from bigger companies and research institutes is exactly the opposite. 90% of funding goes to those well established and research funds, research organizations and those, while 10% of the innovation comes from there. And exactly the opposite, 10% goes to there where 90% of the innovation comes from. Some industries, maybe medicine industry is one of the exceptions, for example, because they are quite in forefront. But this is something that we need to address.
Yeah. Okay.
Yeah.
Very interesting. Thank you very much. So we will open up for the panel, and I welcome up. Sepper, you can stay here. And all the speakers, please, and also Matthias, you're on your way. Alexander Schenk. Hi, by the way. Welcome. And think we have everybody here out there. Yeah. A big panel. What a lot of knowledge we have here. So I would like to address a few comment first. A common question addressed to all of you. You can, the one who feels, feel that they have something to say. Not everybody has to say anything to comment on every question. But I would like to drop a question. Now, I have actually forgot my glasses today, so I need to stand with you guys where I have some kind of light. Thanks. So,
I'm shining.
Yes, you are shining. Yeah, one general question. There is a narrative going on right now on the circular economy, which is sort of taking the pathway going maybe the wrong way. And that is from the systemic view of the original circular economy concept and principles, more to recycling, because that is a simplified view on this. And probably it's human, that is sort of human that is developed in this way because it's very simple to understand. So what I see personally is a risk that we continue in the linear world, but just make a little loop in the end and say now we are circular because we have a take-back system or whatever. So what is your view on this, and how can we, if you have an idea, how can we sort of switch or tweak it back to the original understanding of the need for at systemic level change? Anybody? A volunteer? Matthias?
You can hear me. I can take this one because I think this is a very, very important question. And I would like to give 1 minute answer. I think the starting point is, if you look on what we do normally in the society, is that we try to make what we already do a little bit more efficient. That is the starting point. We try to make it a little bit better. And I think that is the wrong way to do things. We should start off always thinking what is the right thing to do. And then try to do that as efficient as possible. And I think this is important to bear in mind, because when you talk about this type of circular business models and companies now trying to implement it, they don't really consider what is the right thing to do. They're trying to adopt this on all the existing business or the existing products. But they're not really considering to change the business model and also other things. And I think this is crucial in order to be successful. And otherwise it will be just a question about waste. And I also think this is also one more thing. We need to consider the language. The language you are using affects our way of thinking very, very much. We should not talk about waste. We should talk about products and resources that could have different types of values. But just because we start to talk about waste, the value of something is going down, even if the value is the same as before. So I think that is also something to consider.
Yeah. Does it work? Yeah. And I think I have a small addition on it. If we talk about systemic changes, it's also a bit perhaps, oh wow, that's really difficult to reach. So I think it's also a kind of reaction on there's more than just a systemic change. Let's start step by step and doing the right thing to move and to transition towards a more circular economy. And I think that people might be a little bit too difficult if you have to do a systemic change, but where do you have to start then? So I think it's a reaction to make it more accessible, and that then people start with, okay, we start with recycling. That's perhaps the most easiest part, but I think it's a reaction, contra-reaction.
Yeah.
I would also take a little more positive approach. Actually, I think it's good. And I think it's very natural, because it's a low-hanging fruit. It's not either we do waste or circular economy projects. It's one kind of a circular economy project, and it's a very low-hanging fruit because it does not have all these issues with a new business model, which is very complicated to finance as a banker. We have just in last year issued our first sustainable awareness bonds, which will address all other SDGs except climate, because there we already have the green bonds. And of course, the first projects are wastewater projects, because they're the most easy way. But that's just the first step. The natural next steps will be more complex projects, but we have to get started. And I think getting started quickly with these low-hanging fruits is actually the best way to get the market and the market players interested in this, because, oh, yeah, well, you can brand it that way, you can either do some money on it, or at least get a better reputation, which is very valuable for most of us.
Are we doing the full round?
You can present yourself as well. But you have
my name is Tobias Lindberg. I work at Handelsbanken. I'm responsible for sustainable finance. So, Alexander, you were positive. No one has been pessimistic today, and I think it's time. So I think what we're doing in sustainable finance is still such a small market, and it's not really... I get very cautious when sustainable finance is discussed as a force for change, because it really isn't at this point in time. Sustainable finance is mostly about communication, and that communication is important. I help my clients to facilitate good dialogue about their ongoing investments and their sustainability strategy with the investor community. And in green loans, we have a similar dialogue, but with our clients on the lending side, right? But I think the challenge that we're facing is just so huge, right? So up to 2055, we're going to add 2.3 billion people to the planet. That's a 30% increase from today. And about the same amount of people will be lifted from poverty and extreme poverty. So that's about 5 billion new consumers. They're going to need fresh water, they're going to need energy, they're going to want infrastructure, they're going to want to drive cars, they need transportation solutions, right? And that's going to require a tremendous amount of resources. And this is where circular economy comes in. So is circular economy a force for good? Yes, but it's also a complete necessity, because otherwise I don't really know what life on this planet is going to look like in 30 to 50 years' time. And I guess this event is about the role of finance, right? And I think I could talk for a long time, so I'll just keep it short. But banks, we provide financing, right, to society, to private clients, to corporates. And this is an important function of society. But banks take quite limited risk, right? When you give a loan, the upside is getting your money back and some interest. It's not like investing in a company where it could turn out to be the next Spotify and you're set for life. No, you get your money back, and if you get your money back, you're happy. But this also means that the function of bank is conservative on risk, right? So I think the discussion today is about both the large corporations in the existing linear economy and the companies that are providing tomorrow's solutions, trying to push for a circular economy, the transition. And it'd be really interesting to discuss the role of banks in providing financing to both the transition of the companies in the existing linear economy and also the startups, obviously.
Okay, we have one here, but do you want to comment on the side first on the question before Matthias goes in? And no, okay, Matthias, please.
Very good comment about the risk, because I think this is also a misperception. A lot of people talk, okay, this will increase the risk for banks and finances. I have seen cases where actually this is a way to lower the risk over time, from both the financer's perspective, but also from the company's perspective. Because if you sell something to someone, then normally you need to finance that. And then, let's say I sell you cars, but then you need to finance your car. And when you don't need a car any longer, it's tricky for you to find a new customer, and actually it's harder for you to understand the real value of that used car. But if I provide you with a solution of the car, if you don't need a car any longer, I can take it back. I know how to preserve it and actually keep it on a high level, and it's easy for me to find a new customer. So this is also a way for for the bank and so on to lower the risk. But it's also that most likely, since I know that you will only use the car for 5% of the time, I can find solutions where I can, with fewer units, serve a bigger market, actually have a higher profit. And that is also a way to lower the risk. So in some cases we have seen the total turnover decreases, but the profit increases.
Did you want to say something?
Yeah, I just wanted to come back to your question and about definition. Just wanted to bring maybe a point of view from the, a researcher. And, researchers spend a lot of time just reading lots of stuff from not just literature, but also company reports and things like that. And, I agree that now there is this tendency of simplifying the meaning of a circular economy. But if you look in literature, a little bit over a year ago, a researcher published an article, and basically he classified 114 different definitions of the circular economy, and probably now we are reaching a higher number. So it's interesting to see that the general public tend to simplify a lot, whereas the research side, the academia, tends to actually amplify that. So
I was just saying that we have a new wording a couple of weeks ago in an article in Aktuell Hållbarhet in Bonnier Media, saying that we are now not only have greenwash now, we have circular wash. And maybe a circular wash is a risk you see when you have that amount of definitions, and also you lose sort of sight of the bigger picture and recycling. So I think you're right, Alexandra. I agree with you as well that this is good in the recycling. The thing is just how can we not get stuck in that narrative of recycling? That's the key. So, okay, everybody had to say, shall we continue or?
Yeah, I would like to add one thing to the risk part. We are a bank indeed, and we cannot take all the risks. We also have a certain risk appetite because we have also responsibility about the savings of our clients, for example. So, but on the other hand, we need to understand the new business models because that will be the models of tomorrow. And you were talking in your presentation also about the linear risks. It might be that we have a higher risk in our portfolio because of assets become redundant, for example. And the new business models, we find them now a little bit difficult or exciting or challenging to finance, but it will be the solution for tomorrow. So we need to.
Yeah, I have two things. Just hooking on what you just mentioned. I see that the companies, because I'm talking with a lot of companies, they will force you to provide them with new solutions. So that is quite simple, because they will move towards this type of selling functions rather than selling products, because that is more profitable. Then it's up to you to provide them with the solutions. So for me, it's very, very simple. One way to make it simple for you is related to this. I'm researching myself, and I have read this crappy article, and it's really crap, because a lot of researchers were developing, just for the case of developing a lot of new definitions, completely useless. What actually will start next week in Paris, it will be a meeting, a new ISO standard about circular economy. And one of the first things we'll do is start off defining some of the core concepts, principles. So when you take decisions, you can check, do the company's work according to the principles? Because I think standards is needed here. Otherwise, it will just be a chaos.
One remark on the risk. I mean, everything boils down to the risk taking. I mean, we're humans. We are afraid of the unknown. As bankers, unknown means higher risk. Higher risk means higher premium. Means difficult to obtain financing. And there we have a lot of different roles to play. I mean, I'm standing here between commercial banks, but I represent a public bank. And we have a different risk appetite. And in particular, on the EU level, the European Fund for Strategic Investments exists, where budget money is put into more or less a guarantee for us to take more risk in order to address exactly that part where it's maybe still a bit too early for the commercial banking sector to kick in.
Yeah.
So there are some tools in the box from the banking sector as well, or the financial sector.
We forgot to present you here. I think Alexander Shane from...
Alexander Schenk, I'm the head of office of the Sweden office from the European Investment Bank. The European Investment Bank is the house bank of the European Union, owned by the member states, and we're the biggest multilateral financial institution in the world, far bigger than the World Bank, if you look at the financing volumes. Just to brag a little bit.
So just a comment on sort of the risk and the necessity for speed. The green bond market started about 10 years ago, but it's still just a sliver of the capital markets. So there's so much buzz around it, and I have been working so hard to make this market grow, but it's still tiny. It's absolutely tiny. So I think given the time that we have to sort of make a dent on climate and biodiversity and the environment, we need to progress much, much faster. And I think if finance should be a driving force for circular economy and circular economy models, you can't engage on this as a niche. It has to be done broadly, right? But the one thing that all banks have in common is that they're really good at assessing risk. So how is it that many banks today would probably come to the conclusion that economic models based on circular economy have a higher risk? And I'll tell you one of the reasons. It's because, well, the first thing you learn when you go to university and study economy is something called economies of scale. So let's say that you're in the linear economy. You're an international company present in 40 countries globally. You have a balance sheet of 100 billion euros. Your economy of scale, i.e. the efficiency in your production, is extreme. And this means that when you're trying to transition to a circular economy model, which is capital intensive, I think everyone here will agree on that, you're up against a model that has been running for the past 100 years and is just incredibly, incredibly efficient today. So it's very unlikely that whatever solution you present is going to look as economically viable as the current option. And this means that banks probably won't be willing to provide financing, or at least not at the same terms as they do to the existing companies. So how can you shift that?
But isn't this collaboration?
It could be, but
and sharing,
so
sharing
just my
models?
point, because I was just coming to my point.
Yeah.
So just 30 seconds. There's, a lot of externalities, and they aren't being priced correctly, right? So I think rather than saying to banks that, look, why aren't you financing this? Create the risk conditions that makes this attractive to finance. If the externalities are priced correctly, you'll see a much larger interest from the financial community to finance activities in the circular economy.
Well, you should, what you're saying is actually that you should bring in the positive externalities within the circular economy as business models assessments, and then bring in the negative externalities in the linear assessments to get a true picture. Is that what you're saying? Isn't it?
Well, I could mention probably 10 externalities that aren't priced today. So carbon is the most obvious one. In Sweden, we have a carbon tax, and that's quite progressive, but in most jurisdictions, there's no carbon tax. And just the fact that there isn't means that you're allowed to pollute, basically catalyzing climate change. And there's no cost to you as a polluter. So I think bringing those externalities home is gonna make it clear that solutions within the circular economy are more economically viable, or at least at, on the same level as current
there are some
linear
hurdles.
companies.
There are some hurdles about that, but let
Okay, so I think it starts with partnership, long-term partnership and trust. So if you build your relationship on trust, then together you can explore new markets and then you can manage the risk. So a good example is what we've done in UK. So we have had a cooperation there with National Health Services for many, many years. And we've been offering, through traditional leases, we've been offering ambulance financing. So, and what we noticed that was after 5-7 years, the ambulances were returned. So we said that this is not good. What's the reason? Why are you returning all these ambulances? So the answer back was, yeah, we noticed that the maintenance of the ambulances after 7 years is too high. So then we took a discussion with them and said, what can we do together to change this? And we went down, we analyzed down to components. So what can we do? So we figured out that some components have a longer lifetime than others. So what if we take back the ambulances, we change only those components, and then we can extend the life cycle of the product. So we did that together with the customer, and it was built on trust and the partnership that we already had. And by doing that, we now double the lifetime of the ambulances. So instead of leasing out the ambulances for 5 to 7 years, we now add another 5 to 7 years.
Okay, thank you. So this is the question about what do we do about obsolescence, right? Built-in obsolescence. That's the answer is designing the product from start. I think that Matthias had one short comment there on that.
Okay. Can you hear me? Yeah. I think your point, but I also want to raise one thing. I'm an engineer as a background, and I think this is a very, very important message to banks, people working in the financial sector. A product is designed to fit the current business models normally. And related to cars, yeah, they have been designed to actually act like that, because that was part of the description, what should be designed. Companies moving towards selling solutions, functional, circular economy business things, they actually redesign the products. So it becomes much more durable, easy to repair and maintain and so on. That is also one reason why it can be good, because that will reduce your risk over time with this type of new solutions.
Yeah.
I mean, one thing that maybe I could add to that, because I hear that we actually jump into different branches of the same tree from time to time, and we just combine everything around renewables and sustainability and circular economy with each other. Sometimes you talk about something that could actually go as an antonym to this kind of consumerism, so you go on margin business models and so on. But another tangible example, when you talk about this kind of infrastructure problems that you actually brought up, and these are quite more tangible for us, because we have a deal of the population of the planet that actually have a problem with infrastructure that needs to be developed. And usually the gap that we could actually bridge with the help of financing in different continents is that those technologies that we have, we could actually try to transfer them to new places to get actually really, really good business cases, because we're leapfrogging. For example, if you're starting from a scratch to 5G, compared to countries that had a normal LTE system and 3G and 4G, taking this down and then trying to define something that actually gives you a motive for new business models. Sometimes it's quite easier to talk about those kind of infrastructure development that gives you good cases for circular economy, but usually we even stand ahead of those kind of development in different countries. If you're talking about, for example, energy system, why do we have really good settings for circular economy in Stockholm? Yeah, we have the district heating and district cooling energy grids, which basically is built for cheap energy that all of us could as a social service use and then pay for it, right? But it was never built to actually do something circular. It just ended up to be an add-on in this kind of business models that has to do with sustainability and circular model that actually we need to start going forward with help of financing in places that there is room for doing things that later on could become a best practice in places that actually have other things in place. Yeah.
Okay,
yep.
Thank you. Well, you have all mentioned, especially Matthias, the sort of mind shift that is needed. Well, who will bring the flag and go in the front? Is it the large corps, the consumers, or the startups, if they get financed?
Yep.
Who has got the stake right now? Who is it, or is it actually the policymakers? What do you think?
I guess it's the solution providers at the moment. I mean, you see like all of these different business models that Matthias mentioned as a service, for example, or this kind of like disruptive innovations as, you know, likes of Uber that don't talk to anybody, just creates the problem, and then everybody runs to like regulate, and you don't get to do that, and you need to pay taxes, and you know, so they create this problem that after that shapes us quite like a large market. So these could actually like get a niche and open up, so they have a punch. So sometimes this is like really important. And then of course, like when you talk about like kind of like top-down approaches, the policymakers enable that quite a lot, because the established business as usual sometimes has difficulties to change behavior, because they have a lot of like, you know, kind of like weight on their feet that they can't actually do that, because we as people stop them sometimes. We own the large companies, our pension funds own the large companies, we own the banks, it's our money that actually is in the banks. But if they don't pay like good return of investment on my money or my pension fund and so on, I take it out, I put it somewhere else. So it's quite important to see like awareness raising and policy versus disruptive innovation, both of them.
Anybody else want to? Yes, please. Yeah.
I think the last point is a very important point, because we always like blame the banks, and I'm used to get blamed, but that doesn't matter. But I mean, how many of you have investments? Pensionssparande.
Yep.
Everybody. Yeah, how many of you pick their investments or pensionssparande for circular economy reasons? Or for the return.
I'm going to die before it
Things
pays.
like that. I mean, it's true.
Yeah.
You own the place. I mean, we're a public bank. We're owned by the citizens of Europe, for instance, and you're owned by your shareholders. So we did a questionnaire in the whole of Europe, asking the consumers how much attention they pay when they buy a product to the CO2 impact of that product. And it was about, an average, it was about 60% said they paid attention to that. In Sweden, which tend to believe they're the best, it was just 40%. Well, if the consumer, and that has to do with awareness, and awareness comes from everybody, that comes from policymakers, that comes from think tanks, that comes from general public, and things like that. But that's a very important driver. I mean, the consumers are the most important driver, I believe.
I totally agree, but I would also add something that, you know, we're spending some time in my team, and I think that also the public authorities, the governments, you know, the public bodies, if you look at, you know, many statistics, are big purchasers and spenders, so obviously they can influence the market. And for instance, I'm currently leading a project on circular public procurement, and we're trying, you know, to complement, you know, the existing structure, you know, for public procurement with a methodology that we've come up with to see if actually we can help and speed up the process. So I really believe that there is also that side. And this is, you know, any public body in any country of the world is a big spender. So that is also.
Ingela, I just need to. We are starting to run out of time, so we should give the
round up.
Yeah, perhaps also invite if there are any questions from you.
Oh yes. So we'll just last comment much short.
Oh shit. Very, very short. Public funding is one thing, but actually public procurement could be a very, very good driver for actually changing the business, because that would also make it easier for banks to finance those customers, because the public is quite good as a customer. So I think this is very, very important. And I think the driver in society now is not the authorities, it's actually the companies doing this now. It's a lot of things ongoing that they have not revealed yet. So in a few years, we'll see a lot of things on the market.
Yeah, I can take that. Yeah, I agree. I was just going to say that I myself, if I can have an opinion in this, even though I'm leading it, is also the large corps. I believe that they are actually driving, because it's business that they initiate the business models, they go to you for seeking finance, and it's actually their business. They are driving, as always, innovation and business, because they have their customers bring on a business plan and value proposition and create value along the value chain. So my personal belief is actually the circular economy. The large carbs. Okay, great.
You mentioned the 114 definitions of circular economy. You have all mentioned risk. So I was interested in finding out how much research is going on in redefining the risk model, if that is one sort of key showstopper. How many are working on that?
Here.
There are research ongoing, but maybe more from a more holistic perspective, because when talking about risk, you need to understand the system. Not only, you cannot just pick focusing on risk. You need to understand what is causing the risk and how can you avoid it. And at the same time, risk can be something positive, because since you have a risk, you can see a business opportunity in that if you can solve it.
I think we are working on two things with regard to risk. On the one hand, I just mentioned earlier, it's also about the linear risks. What are the risks which are in your portfolio? But especially for the new business models, we also need to assess the risks, because we want to finance new business models, but we also see that they do not comply to our risk policies. We have for A, we have a risk policy, for B, for C, for D. So via the client situations we face, we try to rewrite and reshape our risk policies.
We all come from industry that is, first of all, regulated, and also very much relying on policies and to how to manage risk. And I think what we will see in the future is really companies maybe challenging their own banking license, if they have banking license, moving part of their business to other legal entity without a banking license, to be able to explore a little bit more about these opportunities.
Hi, thank you so much for the panel discussion. My name is Enrique, I come from Sustainalytics. So I have a question. It's not more related to debt, but also from the equity side, especially from institutional investors. How do you see, you were talking about the linear economy, major companies locked in this model. So how do you see the role of financing and institutional investors to influence investee companies to start moving forward to circular economy, especially to tackle issues like plastic pollution?
Interesting question.
I guess all of us want to answer this one, right? I'll start. And hopefully give the best answer. No, jokes aside. Well, I think the problem is, I was also discussing scale, right? Because an alternative is that you could go the green bond route, and in 10 years' time, you're going to have a circular economy financing product that's, maybe 100 billion euros, maybe 200, but it's still not enough. It's not nearly enough. So what I was proposing was rather that you need to shift the incentives in the market, right? So I wasn't really able to finish my train of thought, but there are a lot of risks. So I worked with a company called Stena Metall last year as they issued their first circular green bond. And I learned something that I thought was very interesting. If you in Sweden want to extract waste from a landfill, a deposit, you can do so. You need the permits, but you can do so. But you're probably not going to be able to extract, you're not going to be able to convert 100% of that material into reusable fractions. You're going to have to put some back to the landfill. And then you need to pay the landfill tax again on whatever you're putting back. You know, we put all these obstacles in place, right? That's really preventing the move into a circular economy. So what I'm proposing is that instead of looking at specific products targeting just a small niche that's going to take 10 years to grow into anything substantial, you know, really look at what are the barriers to unlocking finance at scale towards this market.
I think I need to step in here and be the time police, because it's not 7 o'clock, it's 5 o'clock actually. And we also have one final speaker, the ambassador of the Netherlands. So I think we should invite you up, and you will make some conclusions and final remarks. And then, of course, we have a mingle afterwards, and I hope many of you can stay. So those of you who didn't get a chance to ask your questions can do that during the mingle. So,
yeah, thank you very much. And I will also invite Ines here. I'll just say that, for heaven's sake, continue to discuss the issues along with the champagne. It's always champagne in embassies, isn't it?
I'm expecting that. We'll see.
So, thank you.
Thank you very much. It's always good to have time police around. I should have it on a daily basis. It would really save me a lot of time. Thank you very much. I really enjoyed this panel discussion, and the speakers have clearly shown the sort of complexities and angles when you discuss financing of circular economy. But I would like to end with a few remarks, and one remark is, why are we talking about the need for circular economy? I mean, we shouldn't forget that we do this because of the consequences of climate change. And if we read the reports and if we look what scientists are coming up with, we have about 11 years to save the planet before tipping points start tipping the other way. So with that sort of urgency in mind, and I know there's a lot of confusion about this discussion, etc., but with this urgency in mind, we can't take forever to discuss the need for financing initiatives like circular economy. There is hardly a choice. We have to do it, whether there are financial risks or not. I mean, the costs of losing the planet are sort of an overarching worry, if you would ask me. So that's a sort of general remark. I mean, the circular economy, it's not like discussing something, you know, some sort of hobby or pet project or whatever. There is really an absolute need to start with things like that. So that's for starters. Now, of course, I represent the government of the Netherlands, not a private sector. So as a government, we have done a few things, and one of the biggest things is setting a target for a circular economy. So in 2050, the Netherlands should have a circular economy. That's quite something. I mean, we are ranking 16 on the world index for GDP and exporting countries. So we have a major polluting industry as well. We have the harbor of Rotterdam with 30-kilometer stretch of oil refineries. So making all that completely circular in a few decades is an enormous ambition. And nevertheless, without these sort of targets, without the government driving and pushing for that, nothing will happen unless the market starts asking for it. You know, when citizens start being sort of uneasy about things happening, or when the private sector feels like we have to do something, the government is lagging behind. But the Netherlands has taken a really big step. We are one of the few which has set this sort of initiative, and in order to help business to achieve those goals, we have set up a few things, and let me mention just a few. We have created InvestNL. InvestNL is a government entity which helps financing initiatives in whether it's in sustainability, in energy, in mobility, health, you name it, but exactly the sort of projects and businesses where it's difficult to get your financing from the market. So that's where InvestNL steps in. A second example is the Acceleration House, a bit of a strange name, but Versnellingshuis. That is also government-led, where we help business to overcome obstacles, whether it's in law or in regulations, or to help companies that want to take initiatives in circular economy to find the right network, to help them find financiers, you know, really help them scale up their business. So that's a very concrete and very practical sort of initiative you can take as a government. And the third one, and I don't know if it has been mentioned, but Green Deals. I missed the first part of this seminar because I was hosting another thing in the residence. But Green Deals is a way where you form a partnership between a grassroots initiative, citizens that come up with a sort of initiative to do something in their neighborhood or whatever, and they take on board a company, and then they stumble on a certain regulation, whatever, and there the government steps in, where we sort of not bend the law, but make new interpretations of existing rules so that we can help those local initiatives to flourish. Meanwhile, we've started this a couple of years ago, and already now more than 200 green deals have been concluded. So it's almost becoming a fashion. Very good. Check the website greendeals.nl. You'll find all sorts of interesting, totally different initiatives. I think it's really great. And why is this Green Deal so successful? That is also because of law. You know, smaller companies find it difficult to work with legal implications, legal obstacles. So Green Deals can help them to overcome that, can help them to attract finance. So it's a fantastic way to help getting those targets of becoming a circular economy in 2050. So that would be my concluding remark, and maybe one more line, and that is, it's also, I mean, we talk about a lot of difficulties, it's complex, etc. But it's also fun, you know. I mean, trying to achieve those goals requires new partnerships. It requires linking to people and networks that were not in your network before. It requires creativity. It requires innovation. So that it gives a new drive and a new energy as well. So that's a more positive note to see it. With that, I would like to thank the panelists for a really interesting discussion. I really enjoyed that, and it also makes me realize how complex it is, despite my light remarks about it, but that's because it's already late in the afternoon. But thank you very much. I would like to thank Mistra and NMC for their collaboration with us to make this happen, set it up. And of course, I would like to thank my colleague Eva Blum, who has been instrumental in setting this all up. Thank you very much. And of course, Ingela for moderating it. And for the time police to make sure that there's nothing standing between me and your drinks. Thank you very much. And please stay with us for a while to ask the questions that you haven't had the chance to. Thank you. Sorry to step in a bit late, but that was...
That was great.
Yeah.
Thank you for thanking everybody, including Ingela, who I didn't have a chance to. Yeah, great.
Yeah, no, but thank you. And this was fantastic. I mean, it was the right people standing.
Yes,
Absolutely.